SoFi made a 52-week high of 2661 today, August 26th, generating significant excitement about its path ahead. In this video, we'll explore key factors behind SoFi's surge, my thoughts on where it's headed next, and I'll show you how I plan to capitalize on this surge with an actual trade that I made today. Let's go. Hi, my name's Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family if it would help them with their financial journey. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. So before we talk about SoFi, let's talk about what happened this past Friday. So Fed Chair Jerome Powell opened the door to a September rate cut on Friday, saying in a speech from Jackson Hole that the baseline outlook and shifting balance of risk may warrant adjusting our policy stance. In a speech that touched both on the economic outlook and the Fed's new policy framework, Powell took pains to note that the risk from inflation remained tilted to the upside and saying that tariff-related inflation pressures are now clearly visible. We expect those effects to accumulate over the coming months, Powell said, with high uncertainty about timing and amounts. The question that matters for monetary policy is whether these prices are likely to materialize, raising the risk of an ongoing inflation problem. Powell added on inflation that Fed will not allow a one-time increase in the price level to become an ongoing inflation problem. Overall, the markets concluded that Jerome Powell's speech was more on the dovish side, indicating a rate cut in September. So with that, if you look at the indicators of a price cut before the Jackson Hole meeting, on Thursday, August 21st, we had a 75% chance of a rate cut for September. But then obviously after the Jackson Hole speech, that has jumped up to 86.3%. And if I pull up the Fed CME rate cut indicator, the chances of a rate cut as of this afternoon on August 26th are about 87.3%. So let's talk about SoFi's business next and see how a rate cut would actually benefit SoFi. So for those of you not familiar with SoFi, SoFi is a fintech company specializing in personal loans, banking, mortgage loans, which includes new home loans, refinance, and home equity loans, student loan refinance. We have private student loans, credit cards, insurance, and even travel. If you look at a breakdown of SoFi's revenue, you can see about 56% of the revenue comes from its lending business, which is basically lending people money for loans, which we looked at, student loans, mortgage loans, etc. So assuming we have an interest rate cut in September, this is how it's likely to benefit SoFi. The cost for SoFi to borrow money to fund its loans also goes down, which basically means reduced costs for its funding. With cheaper rates, we're also going to see an increased demand because cheaper borrowing rates will make it more appealing for the consumers to go out and take loans, whether it's personal loans or home financing, leading to higher origination, loan volumes, and more business for SoFi. Obviously, with lower interest rates, it's going to make it easier for SoFi to sell its loan to other investors or basically buyers of those loans, and that can generate additional revenue and improve liquidity for SoFi. With lower rates, we could also see a resurgence in student loan refinancing applications, which is again an area that SoFi excels in, so that would likely benefit SoFi and increase its revenue. So talking about overall impact of lower end on SoFi's business, obviously the increase in both loan origination and refinancing activities can offset any potential decrease in net interest income from lower rates, leading to overall revenue growth for SoFi. A combination of reduced funding costs, higher loan volumes, and increased sales contributes to a more favorable financial position and improved profitability for SoFi. All in all, rate cuts provide a powerful tailwind for SoFi, especially for its lending business, which we saw earlier is about 55% of its revenue. So all in all, if we do see an actual interest rate cut in September, it is likely to boost SoFi's business and revenue in the months and years to come. If we look at SoFi's daily chart right here, it made a new 52-week high of 2661, but ended the day down slightly at 2562. Now, if we look at the daily candle right here, this is last Thursday, and it ended last Thursday around $23.25. So if you look at how much SoFi has risen since last Friday up till today, SoFi has risen up 12%. And if we look at this chart right here, this captures all activity from 2021 all the way through 2025. And if we see right here in 2021, it made a high of about $28.29. So we have a nice cup and handle chart formation right here. So what I believe SoFi is going to do next is get to this level right here, 28.22. And if it does cross that level and breaks that level, we're going to see SoFi probably get to about $30. That's basically where I think SoFi is headed in the next few weeks, depending upon, the market conditions. September is generally known to be not so great of a month for the stock market, but SoFi has been holding pretty strong. Yesterday we had a red day in the market and SoFi was actually up 4%, representing a lot of strength behind it. So we'll see how it goes, but that's basically my target for SoFi is first get to this 28.22 level. And if it does break that, then we could see the $30 level soon. So having said that, I have the 6-month SoFi chart pulled up here on Thinkorswim. And as you can see right here, a slight pullback today after 3 massive green candles. And it's currently at the top of its Bollinger Bands. And for those not familiar with the Bollinger Bands, the stock generally tends to trade within the Bollinger Bands 95% of the times. So in instances where it actually jumps out of the Bollinger Band, we'll see that it quickly reverts back inside, whether it's on the upside or it's on the downside. So keeping that in mind, it's at the top of its Bollinger Band right now, and we saw a small pullback. Since I'm looking to build a position into SoFi, I like the middle of the Bollinger Band right here, which is this $23 strike price. Now, if I zoom in into the charts a little bit, I also see a lot of support under these candles right here, under this big red candle. And the support goes all the way back to July. So if I look at this level right here, it's about 22.45. And then we said the middle of the Bollinger Band was around $23. So let me pull up the options chain and I'm going to show you which contract I went with. So I went out 31 days for this play and I chose the 22.50 strike price, which actually puts me slightly under the middle of the Bollinger Band because the middle of the Bollinger Band is exactly at $23. So just to be on the safe side, I went slightly lower than the middle of the Bollinger Band, which is the support level that I was talking about. All these candles, we have strong support there. So I chose the 22.50 strike price. And if you see right here, I built a small position. I sold 10 contracts of the 22.50 strike price, and I received 49 cents per contract, which is basically $49 because one options contract lets you control 100 shares. So 49 cents times 100, basically $49 per options contract. And I sold 10 contracts again for the September 26th options chain, about 31 days out for the 22.50 strike price and collected $490 in premium. And if you do the math, it's a little bit over 2%. Looking at the chart again, if SoFi does come down to this level in the next 30 days, I think that would be a fantastic place to get a sign and then ride SoFi back up to all-time highs. And that's how I plan to play SoFi. So that's it for today's video. If you enjoyed it or learned anything useful, don't forget to hit that like button, subscribe to my channel, and comment down below with your thoughts or any questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.